Hi everyone, so everyone's looking at the work from home stocks. Where can we make money given that we're all working from home? Now, there are some exchange traded funds which have been produced. Don't just blindly go into them thinking, oh, I'll just go into a bunch of funds. There's even indices which have been created around this. We actually want to know, well, wait a minute, what's underlying these? What are the factors and the criteria that they're looking at? And what's interesting is they're looking at a lot of the things that we look at when we examine companies, such as their valuation, their Altman Z scores, the technicals, the growth, the value, the dividend yields. All of these factors go into play. So we know we're on the right track because we know that our approach is being used by various companies, and then they base their models upon this. They might give them certain weighting. Like I said, we look at valuation, growth, income, momentum, volatility, cash flow as well, alpha, the ability to outperform the market, and Sortino, the risk against the returns that they've generated, and you weigh these accordingly. So this is just to give you an insight on how this is done on a professional multi-billion-dollar fund basis, which is what this exchange-traded fund has done. But to return back to that story, what about the specific stocks? People want people to stay at home, and so forth. How might these names then be generated based on these criteria? What are these names? What are the kinds of companies, when you look at these criteria that are coming out, when you play around with their prices, their earnings? What's interesting here to note is everything has a hypothesis behind it. Doesn't necessarily mean that just because there's a strong signal strength on a certain thing that works really well. So it's then been tested over a period of time. For instance, Twilio, a popular company out of this, which has indeed run rather well. And so they look at this, they have then broken down all of these factors: value, momentum, the amount of leverage it's got, where it sits into this, and are the signals coming up with the kinds of names that they would want based on the results which have been generated. So again, a little bit of an insight into how this is actually done. Once you've correlated it to a specific company, so you've got your sort of benchmark to make sure that whatever your hypothesis is, it should capture a certain company. Once it's captured that, you can then look to see, does it capture other companies as well? Does it also give us other names which fit into that on a historic basis? So that gives you some kind of idea, some notion of the kinds of things that are looked for. Now, you might think at the end of all of that, bloody hell, that's a lot of hard work. Is it really worth it? Is it worth going to all that trouble as well on all of that? And well, what can I say? I think, it depends on the time, energy, and effort you have. Obviously, I do this for you. When you look at the Great Investments Program, we go through all of this for you and narrow it down and show you the homework and all the things that we've gone through, how we came to those names, and the analysis that we did. But as you can see, there's a lot of homework that does indeed need to be done and go into all of this. Hopefully that gave you something of an insight on how certain theories can lead to specific stock names and how those can be analyzed.